welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets take a breather after a record surge. The Nifty is little changed above the 10,400 mark. Divi's Laboratories post its highest intraday gain ever after the US Pharma watchdog removes the import alert on its Visakhapatnam plant. Power Grid and Vedanta are the Nifty companies slated to report their earnings today. And Donald Trump is set to pick Jerome Powell as the next Federal Reserve Chairman. That's a Bloomberg News report.
Okay, let's bring up what the markets seem to be doing in the session today. There's a clutch of names which are active. Of course, the new index itself about 10 points in the red. So not too much of activity. You could argue that we are off the lows of the day or off the highs of the day, but that doesn't really mean anything. It's a fairly tepid day of trade, not really going anywhere. At the broader end of the spectrum too, not really moved too much in the session today. So the mid caps and the small caps rather quiet. The advanced decline ratio, ho-hum really. Yesterday, the gainers were higher than the advances. In today's session, not so much. So this is what the mid caps have done. And the small cap index and the advanced decline ratio will also come up on your screen. And then let's have the Nifty heat map and show you what's moving around, or just bring up actually the index gainers and show you what they're doing before I toss it over to Pradeep, who will give us a sense of what the mid caps and the small caps have done. But this is just the picture of what some of the individual names have done here. Market breadth, even Stevens. Contributors, ITC continues to drag. SBI is down another contributing another 4 odd points. And Pharma is having a good day of trade. So while Sun Pharma is showing this 4.5% uptick, but a clutch of other pharma names, the Aurobindos, Ciplas of the world, all seem to be doing rather well in trade today. But Pradeep, what about the broader end of the spectrum? What is working, what's not?
Well, Divi is to begin with, really, which has triggered this rally in pharma stocks, continues to hold on at higher level. That is significant, and there is still a lot of buying at this counter if you look at the price and also volume and what traders are really telling us. Some more stocks. There is a lot of action in NBFC space. So you have Shriram Transport Finance, you have Aditya Birla Capital, which has moved after a long time. It has been quiet for a few weeks now, actually, after the initial action that was around the listing. Telecom, Idea continues to move up, and among the smaller stocks you have Infibeam, which has moved quite a bit today, and also Hexaware is another mid-cap technology stock, so to say, which is doing well since morning after the result. Well, PSUs continue to buzz, and today's trade you have Dredging, which has moved another 10-11%. Over and above yesterday's movement is still up by around 7 to 8%, I guess, when I checked it last. And also you have some more stocks like STC and Hindustan Copper and a lot more PSU names which are still moving up. There is one small stock, IL&FS Engineering, that has caught my attention. This stock has moved over 8.5%, quoting very close to today's high. On the negative side, there are very few stocks, but just one stock, if you could bring up on the screen, which is GVK Power, which has hit the second lowest hit today. Other than this, there are not many stocks, Neeraj, in mid-cap space where there is enough volume support. That's why I have picked up all the gainers and no losers, actually.
Far interesting, and we'll do some further analysis of this one as well. Pradeep has a very interesting chart for GVK for a bit later on in the show. Navneet, a quick check, really anything on the derivative space that stands out?
Well, so far, Neeraj, the trade has been sideways, but everyone will be watching out for Bank Nifty. Remember, today is the weekly options expiry. So expect the Bank Nifty expiry to happen in that range of about 25,300 on the downside to about 25,550 or 600 on the upside. I know it's a pretty wide range, but we've seen a lot of open interest addition coming for strikes like 25,500, 25,600. These are all the call strike, but significant amount of OI addition has been seen for 25,300, which is telling you this could be the support for today's trade. Besides that, on the Nifty, well, India VIX has cooled off for the second straight session, though markets are just about taking a breather after touching those record high levels. That's a pretty positive sign. It's trading below the mark of 12, down almost 2%. And out of the money, call strikes today have seen a lot of open interest addition. Before we go across to our guest, just two stocks I want to highlight. One is Hexaware. It's reacted to into its earnings today. The stocks also touched its 52-week high today, and major long build-up has been seen on the future side. If you look at the open interest edition for November futures, it's up almost 50%, and on the cash side as well, the stock has seen good amount of volume. So let's see how the delivery data pans out. And second is Divi's laboratory. That stock's gone up on high volumes on the cash side, but on the futures end, I've seen just about meager open interest editions so far.
Let's wait and watch if that changes. A bit later on in the show, of course, Navneet will tell us about whether there are possibilities of any stocks moving out of the F&O ban or getting into the ban. But for now, let's talk market, get market opinion. Sandeep Shenoy, Executive Director Equities at Pioneer Investcorp, joins us right now on the show. Sandeep, good having you. Thanks much for joining in. This is Neeraj here. Good afternoon. The next time we should have you in the studios, Sandeep. I think it'll be a nice time to have you in the studios as well. But
sure, will do.
Yeah. But what's your sense, Sandeep? At these levels, the way we are perched, the news flow and the earnings, what would you be doing? What would you be telling your clients to do in the markets currently?
Well, I think on the valuation parameter, we probably aren't cheap, but that doesn't mean the market is going to correct in a hurry, Neeraj. So the money flow towards our market, both internally as well as internationally, I don't think we are going to see a pause button there. So it's a momentum players market, and in this kind of a market, that too, when things are getting skewed, companies which have got decent to slightly better than expected earnings, I think they are going to be at a beneficial end of the curve, and that's what is happening.
Okay. So if there is not going to be a pause button, Sandeep, what is it or where is it that people can lay fresh bets on? I can clearly see, for today's example, pharma is one pocket where people seem to be finding some favor, and you can't fault valuations, quite frankly. They seem to be, at least on the investor side. Are you looking at exporters? Are you looking at specific other themes, maybe economy facing?
Well, I think pharma, as you rightly said, could be one of the contra bets in this scenario and at this current juncture, because there are options abounding in that. So that could be one sector, and especially internally facing, domestic oriented companies as well as US exporting companies could be in for a good run that most of the overhang is slowly drawing to an end. Secondly, I think because of the entire governmental spend which was announced last week, there could be some pockets of mispricing available in construction sector, that too very meager. You can count it on your fingers, and maybe second-rung cement companies which at this current juncture are having some kind of a capacity utilization problem. If the governmental offtake picks, then they could be the ones which could exhibit a market outperforming return. So you have got some pockets of options available for medium-term investors, and you can capitalize on the same.
Okay. Sandeep, stay on. Since you mentioned pharma, just important to point out that big mover in trade, and maybe the reason why the rest of the pharma pack is active too. Divi's lab, which jumped over 15% after the US drug regulator lifted the import alert on the facility in Vizag or Visakhapatnam. Darshan is standing by with more details now. Darshan, now that we know the news, can you quantify for us? Have you been able to speak to people and try and figure out what kind of a relief would this bring in for Divi's?
See, this brings in a big relief, Neeraj, given the fact that, this was a big sentimental issue that was going on, the overhang that was there. Now that gets removed. Anyway, some of the large drugs, despite an import alert, were still being exported for Divi's because of the shortage that was there in the US markets. Now if you're looking at it, that was the big trigger, and the stock had corrected significantly. So last year they had the inspection, post which they got a Form 483 with some 5 observations. After that, the US FDA gave an import alert, and then they gave the warning letter indicating why they had put this import alert. And there were 2 import alerts, 6640 and 9932. So once 9932 got resolved in July, the final 6640, which is the most important one, got resolved. So it brings a big relief because it's a big contributor to the US business. Almost 1/3 of their revenues comes in from the US market, and more than 20-30% of that US revenues came in from Vizag Unit 2. So it brings this now actually cuts down the earnings downgrade that will come in, because now they are free to export whatever they want from that unit. So it's a big positive for Divi's at this point of time.
Well, thanks, Darshan, for all these details. Sandeep, good afternoon. Pradeep here. Do you like Divi's lab?
Well, Pradeep, I wouldn't want to comment on any stock specifically, but in such kind of a situation, whenever there has been an overhang which has cast a long shadow and that overhang gets lifted, you get a bounce back. And if a company is smart enough and capable enough to cruise back to its growth mode, then I think it makes good sense. But having said that, well-run companies in trying times when they are getting really pummeled by bears, that is a time to for longer term and discerning investors to latch on to the stock, not when the everything is out there in the open and the market has given a thumbs up. I think the horse may have bolted the stable.
All right. Well, it's been a great year, Sandeep, for Indian equities. And if I have to talk about two pockets which did not participate in the rally, one we've already discussed is pharma. The other is IT. What have you made of the earnings, which have come from the IT pack? We've seen a spectacular move coming in for a stock like Hexaware today.
Well, I think unless the big daddies start exhibiting a consistent uptrend in earnings, you are not going to see much of a traction in this sector. And mind you, this is a multi-billion-dollar sector where some of the companies can be exhibiting, plus $10 billion revenues. These companies went through a challenging times, and I think it lasted for more than 2 years. The set of rumblers or maybe speed breakers or pause buttons out there. The challenging phase is slowly drawing to an end, but is it going to result in some kind of a uptrend? I don't think so. But yes, you are getting value for money proposition at the upper end of the spectrum in this sector. So I guess it's going to attract its own set of well-wishers and long-term investors. But there's still, the runway is still long enough, and you are going to get multiple options to enter. It's going to be a trader's paradise, and unidirectional uptrend in this sector may be still some time away.
All right. So that's the view on the IT pack. But Sandeep, if I were to ask you, would you advise your clients now to buy beaten down PSU banks? What would your answer be?
Well, I think the poison is out, everything is out, it's a known thing. There is nothing unknown left right now. You can draw your inference as to what is going to be the book value of these banks, especially the second-rung PSU banks. And I think you are getting them at a fair value basis. They have their strengths, they have been beaten down. Some of them still have a fighting chance of survival or maybe a good chance of coming back to their previous lending, what we call as a lending zone, because some of the banks may still not recover back. There may have been a body blow for them and structural impairment of the business model. But some of the players in third rung or second rung PSU banks could be good options for a longer term investors, because they have some franchise, they have some expertise, and they have some reach in regional basis which they can capitalize upon. So hunt there, you will get options.
Sandeep, are you optimistic about this entire process of NPA resolution? And if so, would you also buy into some of the troubled companies like Bhushan Steel, for example?
Well, I think the better way to play the trouble sector or NP resolution would be the banks which have lent to these companies, because if any companies goes via NCLT, I think the last person to benefit would be an equity holder. So it doesn't make any sense for anyone to latch onto these stocks unless you are a private equity fund or a company which is investing in this kind of troubled companies where options are very limited. So for a common investor or even for a larger investor, I think the option to play or the method to play this stressed asset relief or recapitalization or restructuring of these companies would be through the PSU bank, because incidentally, maybe coincidentally also, these PSU banks are the largest lender to these beleaguered companies.
And also, government is looking for some strategic buyers for companies or assets, like for example, Dredging Corporation. They want to sell out the entire 73%. They want to sell some 2-3 plants of Steel Authority, also a plant of NMDC. Do you think these deals would give an opportunity for equity investors in secondary market to make money?
Well, I think at this kind of a juncture when markets are bubbly, whenever an asset sale happens and government is out on the lookout for a asset sale or a disinvestment, I don't think it happens cheap. We had a mispricing many years back when companies like Hindustan Zinc and all got sold, but now I don't think it's going to happen at a cheaper price. So people who buy or companies which buy may have to pay top dollars for it, and the competition is also going to be quite tough. So I don't think it's going to leave something called as a low-hanging fruit for an investor at this juncture. So I think you can give it a pass. You are not going to regret.
Okay. Sandeep, much appreciate you taking the time out, and look forward to having you in our studios at some point of time as well.
Thank you.
Well, that's Sandeep Shinar with his thoughts. And I would have asked him if he's bought into Bitcoin. I just saw a mail from Jayesh which said that Bitcoin has topped 7,000.
Oh.
Can you imagine that? 7,000. I saw a tweet from HCL Technologies today which spoke about Ethereum. And there's some theory that Ethereum at some point of time in the next 1 year or whatever will topple Bitcoin as well. So, of course, these are conspiracy theories, or theories essentially. You never know what turns out to be true. But what has turned out to be true is that Bitcoin is at 7,000.
What is Bitcoin? It's a currency, right?
It's a cryptocurrency.
Cryptocurrency.
So has any currency ever in history moved up like this? No.
Moved down, I know. I don't know about moving up.
There has been hyperinflation in several countries, and their currencies has
yeah, the Zimbabwean currency or otherwise. But yeah, or the famous George Soros bet, which he took.
Interestingly, Neeraj, you know what? There are a lot of Indians who've invested in cryptocurrency. And I don't know, I was just talking to a lot of people. They said that not many people are aware of this kind of a currency, and I'm sure the normal conservative people would not put their money there, because considering it's not regulated, no specific laws or regulations have come in writing. But looks like in the last 1 year there is that awareness, and a lot of Indians are also showing interest in cryptocurrency. Yeah,
well, if you want more details on where people or what kind of people have invested in cryptocurrencies or otherwise, you can log on to bloombergquint.com. It's a very nice piece that Ayush and Alex did, where they paid a restaurant with a Bitcoin, and they spoke to people who had invested in cryptocurrencies as well. But we'll speak about something that people can bet on, and people are betting on in the normal equity markets. Kenneth Andrade is betting on decently leveraged companies. He believes it makes sense. He's the founder and chief investment officer of Old Bridge Capital. Spoke to us earlier on our new series, which has started today, of course, Alpha Moguls. And Andrade says companies with excess capacity stand to gain from a revival in demand, which is well and truly on its way.
All that I look for as far as the data that comes through is which companies actually have a low capacity utilization and push it forward. And today where we're actually sitting, I mean, I haven't seen these numbers with 2017 balance sheet. It's only gotten better over the last decade. Okay, and going into 2019, I think we'll have a very pristine looking corporate India's balance sheet. You're going towards debt equity, which will be close to its historical low. You've got capacity utilizations at 70%. You got a lot of output coming out still. And I think all of that, if you just quantitatively put it together, at the end it looks very good for end shareholders.
So money to be made in fractured balance sheets which are seeing repair. You would reckon that's the theme?
Reasonably leveraged companies, yes.
Reasonably leveraged companies. Infrastructure would form part of that, or no?
I mean, it's too broader.
Narrow it down for us.
Yes, it's too broad a category to look at. But
so narrow it down for us.
You will have any asset-intensive businesses coming back. I mean, capacity utilization is a function of the assets on the ground. The assets on the ground and demand coming back is basically capacity utilization is going up. Capacity utilization is going up, higher cash flow, which incrementally means lower debt. Okay, and you can put the math together.
Okay, let me ask you a pointed question, so to say. I'm not getting into a stock, but I'm just telling you a conversation that I had, for example, with 2 or 3 managements. One of them was Thermax. And they mentioned, while they have a large international presence as well in their order book, but they mentioned that they are seeing orders coming in from sectors which hitherto had not given orders. Fertilizers, for example, was one pocket that he mentioned about. And he mentioned that it will be a play of my capacity utilizations levels moving up. So would you believe that cap goods could be one pocket that could do that?
Yes.
Very
higher
few players.
Capacity utilization is equivalent to higher pricing at the end of the spectrum.
Okay.
Okay, so today we're only talking about higher capacity utilization, but once capacity utilization hits that 80% mark, and that's when companies start taking pricing, right? So if your fixed costs are in control, which most of these guys have it right now, your operating leverage in some of these businesses are large.
Okay.
Okay, commodities, engineering, infra businesses.
Okay, fair call. So that's a wide gamut as well. 2 pockets which were considered gruesome. Selectively, companies are doing well. We've spoken about one, which is real estate. 2, aviation. Is there merit here?
Well, it's a consolidated market, and capacities will only come in line with what demand is there. So, barring a year or 2 where you'll have surplus capacities on the ground, I think that industry is fairly, I mean, it almost looks like it's like an industry which some time back looked like cement.
Oh, interesting. Okay. Now,
so a very consolidated market. Pricing is dictated by very few on the ground.
Yes.
Okay. And the domestic space looks nice.
And while it's difficult to predict the key input cost, but is there a sense that because crude may stay where it is or not really dramatically improve too much, that kind of gives a more predictable earnings cycle to these companies too?
So this will be one of the cycles where aviation will have to test out its ability to price inflationary costs into the market. Right. So it's also a function of demand, and if demand continues to be robust, okay, I think these guys will be able to pull it through.
Interesting.
This sector will be able to pull it through, yeah.
Okay. And within the broad basket of consumption, I'm kind of clubbing aviation as discretionary spend. Anything on the consumption, be it staples, discretionary or otherwise, that you believe could continue? It's a space that has really run its course, if you will, honestly ask me, but is there more steam left out here?
I think valuations are expensive out there, and growth out there could be a little back-ended because the kind of job creation that's happening in India is not the blue-collar, white-collar jobs that have been there. It's more very labor-intensive jobs, so where the per capita incomes would not be significantly high. I won't see a disproportionate growth in per capita GDP, first to say. So I think that cycle could tend to be a little back-ended, the discretionary spends.
And of course, you can watch this whole show on BloombergQuint.com as well. But we have a set of earnings that we want to talk about. Came out yesterday, and a strong set of numbers from Carborundum Universal. Revenues up 13%, EBITDA up 32%, margins expanded about 270 basis points. To talk about the quarter gone by and the outlook ahead is Mr. K. Srinivasan. He's Managing Director at Carborundum Universal. Good having you, Mr. Srinivasan. Thanks for taking the time out. It was a good quarter, but unless I'm very wrong, abrasives continued to face some pressure, and I would presume for a second quarter in a row, if not more. What's happening here?
Yeah, good afternoon to you. Thanks for giving me this chance to talk to you. Overall, the growth was 13% consolidated and 9% on a standalone basis. Abrasives, if you look at sequential quarter, it grew 19%. Abrasives is largely trade-driven. Over 70% of the sale happens through trade. The trade has still not got its inventory, channel inventory back to where it used to be. So this is building up, and consequently it will take some more time. Probably Q3, Q4, they will build up channel inventory back to where it used to be.
Okay. And I believe, from the previous conversations that I've heard you on, the last maybe 3 or 6 months, the managements of Carborundum, this whole move to GST, and therefore one would presume even in the abrasive segment, which is largely unorganized, that the move from unorganized to organized could happen, that this will only benefit you. So what would be your, not necessarily the near term, but a 12-month outlook on abrasives? One, whether the prices will continue to firm up, and two, whether the pain for QB within the abrasive segment, will that move out in a hurry? I know you mentioned sequentially you've grown, but YOY for last quarter and this quarter as well, there's been some pressure compared to what the market was working with.
Yeah, I think there are two things happening here. One is the actual consumption is yet to build up. What we are seeing is actually a certain level of stock filling up in the channel. Consumption will grow with the GDP growth. So this is yet to build up to the level where it can potentially be. A couple of other events that's happening that's going to create some more inflationary growth is going to be the input cost growth. The electro mineral, which is a supplier of raw material to the abrasives, is itself driven by a huge input cost. The input cost growth has been something like between an average 12 to 15%. Now, this in turn is also going to push up abrasive prices. So you're going to see two things. One is growth coming out of volume and growth coming out of inflationary pressure. So the next 3 quarters, we will see significant growth, and that will overall bring the year's growth to a double digit.
Mr. Srinivasan, Mr. Srinivas, can we expect the same sort of EBIT growth, the jump which we've seen for the electro minerals segment, almost at 37 versus 24, which was seen in the corresponding quarter? Can you tell us what led to this growth, and can we expect this sort of growth in the second half of the financial year also?
The electromineral growth is largely driven on the back of higher volume at Volsky Abrasives in Russia. We have produced about 7,000 ton more of silicon carbide during H1 this year, which was not there last year because of power outages in the grid supplies. Now that, along with reasonably strong pricing, has allowed us to have this growth. Now the production is maxed out as far as Russia is concerned. We're probably running it flat, 82,000 tons plus. So we're not going to see any volume growth coming up there, and so any margin growth out of volume is not going to happen in Russia. But we're going to see some kind of improvement in margins on the Indian part of the business because we're scaling up volumes here. The plants that we shifted from South Africa are all coming up to production. The two alumina plants are running at 60% plus already. The zirconia plant will all scale up. So in the next 2 quarters, you will see this is also running up to 80-85%, and with that, the margins will improve.
So overall, would you expect your margin to be even better than what we have seen in second quarter, which is anyways, higher by roughly 300 basis points?
The margins would be around this as a company because we're going to see some inflationary input cost growth, price growth, and there is always going to be some kind of a sequencing story here. The prices tend to grow slower than the input cost growth, so there could be some pressure there. But since we control the value chain, overall, I expect the margins to continue to be at this level, even marginally improving for the next 2 quarters.
Okay. I actually have one final question, or maybe a 2-part question, Mr. Srinivasan. One is, last quarter, post the numbers, you had mentioned, if I'm not wrong, that you would probably see about a 15% CAGR revenue potential over the next 3 years. Analysts believe this would translate into a 30% CAGR revenue bottom line potential over the next 3 years. These numbers would be on target, or you reckon you can better them?
I think we have been saying that we will do 3,200 to 3,500 crores in 3 years, and I think we probably would end up doing this faster than that because of one, the volumes are picking up faster. Second, there is definitely a big inflationary pressure that's coming up.
Okay, so that's good news. The other piece of news which I wanted to verify, we've spoken about 3 quarters ago, if I'm not wrong. One of the things that I remembered Carborundum Universal telling us was that you're working on a set of 12 or 15 patented processes or products, each of which has a potential to become a very, very large business. It's difficult to predict when and how, but as and when it happens, it will become a really large revenue stream for Carborundum. Are you still on that process? Is something nearing fructification? Can you give us some light on that?
We are working on the major platforms that I mentioned. We have filed more than 15 to 20 patents in the last 3 years. Many of them have crossed alpha, beta testing is going on. They would address new emerging big mega opportunities like the EV powertrain, storage, batteries, etc. You will hear about it as we start making commercial investments.
This would be when, if any timelines that you can share?
I think we should start seeing things in the market in the next 18 months.
Next 18 months. So this is a long-term set. So it'll probably come handy once you're... Okay, fair call. I understand. Thanks so much. And congratulations on a good quarter, Mr. Srinivasan. And look forward to have you more often on Bloomberg Quint. Thanks for speaking with us today.
Thank you very much.
Okay, that's Carborundum Universal. Good quarter. The management confident. They're saying that the 3,200 to 3,500 revenue that they were targeting over the next 3 years until FY19 could actually be reached earlier. That speaks of the kind of confidence that the management has. And Pradeep has done some interesting chart dissecting of Carborundum Universal. Pradeep, more analysis on the same?
Yeah, so let's look at this chart, and it's a bit simpler, compared to the 2 charts we have seen earlier. So I'm sure Navneet won't really complain that she got a headache watching these charts. Well, let's focus on the last 2 or 3 candles. First of all, this is a monthly candle, right? So all these are monthly movements. This is where it opened, this is where it closed. These are the highs and lows, same for the other candles. Now this blue candle, which is actually a solid candle, any solid candle on this chart is actually a negative candle where the price has fallen. So look at what happened last to last month, that is September. The September candle completely engulfed the August candle. This was a monthly candle engulfing, which means the top is higher than the previous top. the low is lower than the previous low, and then you have a solid candle which completely covers it and closes very, very close to the lows. This kind of gives you a confirmation that a stock has topped out. So there was an indication that the stock has topped out in September. But see what happened in October. In October, you had another candle, which is a positive candle, and this is again an engulfing, which is kind of telling you that there was some supply in September, which got completely absorbed in October. Now, if you look at it, we have seen a decent up move. The engulfing makes sense, or it is considered as a valid indication only at close to the top or bottom. So a bearish engulfing closer to top made more sense than a bullish engulfing which is happening at top. But what it's telling you is that maybe, and there are so many big investors active at this counter, maybe somebody was selling, so he sold, or they sold in last month, and in last month the supply got absorbed. That will be more clear if you look at what happened on a daily chart. Daily chart in fact tells you the kind of volume support which has come in on every buying, and if you look at it, this is the last week of July, and for last 3 months this was kind of caught in a channel, and now we see at the end a kind of breakout. But what is more interesting, look at this one. This is volume. Okay, so you have these 1, 2, 3 very excellent volume bars, and they interestingly correspond with some very bullish price movement. So this is a significant price movement, and look at the volume. Again, this is the next significant price movement you can spot. Look at the volume. This is the again significant price movement. Look at the volume. It is telling you that every time there is selling, there is not much volume, but whenever there is buying, there is significant volume, and you have a decisive breakout. So this really looks bullish.
Which means there's still more demand for this counter. All the supply is getting absorbed. This time I understood, Pradeep.
Thank you.
Good one. Thanks a lot for that, Pradeep. So that's the complete fundamental and technical analysis, if you will, of Carborundum Universal. But let's talk about one more set of numbers which came out overnight, and I thought the market would really reward the numbers because the numbers were pretty good. It almost seemed a turnaround quarter of sorts. A strong set of profits, EBITDA margins moving into the positive. But let's talk about what could the future months entail. The Chief Executive Officer, Mr. Virender Agarwal of Ramco Systems, is with us. Good having you, Mr. Agarwal. Thanks so much for joining in. Now, I thought from the looks of it that this quarter could have been probably one of the best quarters you may have enjoyed in the recent times. What led to this operational performance? And if you can share with us whether this 4.5% revenue growth that you've clocked in is something that you believe is sustainable, if not in the same vein, then close to these numbers.
Yeah, I think while we may want to take credit for a good quarter, I must say that for us, the revenue numbers are reflected more on what percentage of sales are on cloud and not on cloud. And in this particular quarter, we had more on-premise sales, which result in much higher revenue than previous quarter. So that is the result. That's the reason we have a much higher revenue this quarter. We had very strong booking this quarter. We had very strong booking last quarter as well. But since last quarter, most of the booking was on cloud, it did not show up in revenue number. It has showed up in revenue number in this quarter. And the coming quarter, if there is more on-premise booking, then the numbers will look better than this. If the bookings are
Mr.
more,
Agarwal?
then the numbers will look worse than this. So for us, the measure parameter of success is how much booking we have and how much unexecuted order book we have. Because if clients want to buy on-premise, then we get revenue. If they buy on cloud, then the revenue spreads over 5 years.
Okay, so there is no way to predict this, but is there a way to be able to guesstimate or give us a bit of a guidance into what the current year could do overall in terms of revenues and maybe even profits?
We can't giving any forward-looking, make any forward-looking statement. All we can say is that past 5-6 quarters, we are in the range of $23 million or above of booking. And that's a very healthy range for us because we are adding to the unexecuted order book in a significant manner of the company. We had 27% year-on-year growth in unexecuted order book. And whether it shows up in revenue or not will all depend upon whether we sell more logistics or less. Because logistics is something which we are selling on-premise, and all other products in general we are selling on cloud. So if we sell one large deal, logistics deal per quarter, we will have healthy. So any quarter we sell a mid-size or good-size logistics deal, the revenue numbers will look good. The quarter we miss selling a logistics deal, they won't look good. In HR, we sell a lot of deals. We sell smaller deals, 10, 12, 15 per quarter. But most of them tend to be on cloud. So the future revenue is all very good, but the current revenue may not show up. So I can't, in effect, give you a guide.
Mr. Agarwal, I'm just trying to figure out from a perspective of an investor. I'm not quite getting as to what the next 1 month or the next 2 months or the next next 2 quarters or the next 6 quarters could look like. You are saying that yes, it depends on a lot of factors, but some bit of indication as to whether business is looking robust, whether margins could held up, anything that you could share with us.
Okay, the business is looking robust. We are seeing very strong growth in Asia, and we have for the first time got orders for our HR product from Europe and New Zealand. That's the first for us. We have a few global Fortune 500 companies who have signed up for the product. We have a large multinational European bank signed up for 14. So overall booking and demand for the product looks robust. Asia in particular looks very good. We expect a lot of demand for logistics and our payroll product is what we can say. Whether it translates into revenue or not, as I mentioned, depends upon if it's cloud booking, it won't translate into revenue, and obviously will reflect in short-term EBITDA and short-term profitability. And we believe that we have a long-term business model, and we are chasing the kind of clients and the kind of expansion that we are chasing. So our focus is as much on order booking and making sure our unexecuted order book keeps growing. And my feeling is our cost will not go in proportion to our increase in revenue. So in the long-term basis, we think the profitability of the company will improve dramatically. If you see the headcount of the company hasn't changed much in past 5 years. In fact, it has gone down by about 100 people or so. So in that sense, our wage bill is stable. And while revenue has more or less doubled in past 5 years. So in that sense, we think the margins will keep improving.
Very good, Mr. Agarwal. Wish you all the best. Thanks a lot for joining us and giving us that perspective. But frankly, very difficult for the management to predict what could happen over the next few months or few quarters as well. However, the index is lying flat. Our technical experts should be with us any moment from now. But Navneet has spotted an interesting set of numbers.
Well, Dealing posted a great set of numbers. Let's just pull up the stock and see how that's reacting to the numbers. I guess the profits for the quarter have come in at about 10.7 crore versus 7.6, which was there in the corresponding quarter. And let me also tell you, in the first quarter, the company posted a loss of almost 10.6 crore. So it looks like a bit of turnaround for the company. Even if you look at the total income, that's remained stable. It's 181 crore versus 201, but it's the profitability which has seen a huge jump coming about at 10.8 versus 7.5. And clearly you can see the impact of that bottom line number coming on the stock price as well. The stock of Dealing is currently trading with gains of almost 16.5%, Neeraj.
Well, good going for this one. Really, we can ask our experts about maybe Dealing as well, but it's difficult to give calls on stocks which are suddenly shooting up in trade. Maybe refrain from doing that. But the market's lying tepid. Let's get in our experts on board to speak about how are they approaching trade this afternoon. Sachitanand Uttekar of Trade Bulls and Jay Bala of Cash the Chaos join us right now on the show. Jay, thanks much for joining in. I'm guessing from the comment that you've given us, you're not looking to trade the Nifty on the long side for sure.
Yeah, it's not exactly that way. See, we were bullish on the markets, and if you recall from our call a couple of weeks ago, which was a position trade, we were bullish on the market when the markets were under 10,100. So we still maintain our price objective of about 10,700 for the Nifty. But the risks at this point of time is getting a little bit skewed, and we don't like this kind of risks. And we've always favored very low risk and high reward positions. So at this point of time, it's starting to look a bit as I said earlier, unfavorable to take allocate fresh money at this point of time. So I would rather maintain the existing positions and play the last leg of this rally before a correction sets in, and rather than allocate fresh money. It's better to feel that I'm out of the market and feel that I should have been in the market rather than commit money to the market and feel that I should have been out of the market. I don't want to do that. So that's a strategy I'm exactly adopting, and that's the reason for my comment here.
What do you mean by last leg of this rally then? What kind of correction are you talking about?
See, I mean, the trends are of multiple, multiple levels, and whatever the end point of this leg up, whether it's 10,543, which is a first marker for me, or it's 10,700 and change for me. So this correction is going to be bigger than what people are anticipating. But so it could be something like not a run-of-the-mill 100 point, 200 point correction. It could be something bigger than that. So we're waiting and watching. We're going to see what this market is exactly doing and how it gets to this first marker or the second marker of what we are watching. Depending on that, we'll make that call. And this is at least a correction that's that started from the sevens. In my opinion, at least the demonetization low, or something midpoint to that. So we'll watch out what the market does in the next few days. The squiggle that the market does in the next couple of days is going to be pretty important for me.
Sachtanand, would you be a buyer of the index at these elevated levels?
He is. Well, good afternoon. Yes, what we have been talking about, we discussed it last time. We are talking about a megaphone formation on the weekly scale. And if you look at last couple of trading sessions, the market has been scaling up on a very gradual note. But within this particular formation, there we have seen two gaps. So, if you look at 10,250, this was the earlier swing which was being breached by a gap. So that can be qualified as a breakaway gap for this particular trend. And yesterday, the way the momentum had shaped up, that yesterday's session could be qualified as a runaway gap. So probably what we are expecting is a buying climax to occur soon, and that can be seen somewhere close to say 10,540 levels or so. So purely from a trading perspective, for a couple of days we are recommending long. We are advising our clients to keep a strict stop loss somewhere close to 10,390 on a closing basis, and adhere to the long position in case if you want to trade this particular momentum. But when we talk about the larger picture, this is where we have been advising our investors to take profits and sit on the sidelines. And we are also expecting a sizable correction to be witnessed in this particular series. But so far as a couple of trading days are concerned, the outlook is on the bullish side, keeping a stop loss somewhere close to 10,390, and with an expectation of a termination of this entire move, which commenced at around 9685, it should end somewhere close to say 10,540 levels.
I think I saw the numbers of Gujarat Pipavav Port just before we get in stock recommendations. Just pull up GPPL or Gujarat Pipavav Port and show you what that stock is doing, because I thought the numbers didn't look all that great. This is the earnings preview of Vedanta, but I think I saw the numbers of Gujarat Pipavav Port. If we can just have that stock up on the screen.
The profits are at 44 versus 59, so I think they're lower by 26%. Revenues are also lower by 12% at 151 versus 172 on year-on-year basis. So it's a bad quarter in terms of both
a series of bad quarters, Navneet. I mean,
bottom line.
Somehow the last 4 or 5 quarters, or maybe longer, this one is only flattered to deceive. Maersk India subsidiary, Maersk subsidiary really, but not really living up to its billing. I think the neighboring ports of Adani and others have taken up quite a bit of business from this one, down another 2.5% in trade. Nevertheless, let's talk about specific strategies. Sachidanand, I'll start with 2 strategies of yours, 2 buy calls that you have. One is Wokhard, one is HCL Technologies.
Well, both are from the conservative side. In fact, if you look at Wokhard itself, the focus has been on the pharma stocks now. And this is one particular name which is giving us a very good opportunity to create, some trading longs. So what we have advised is buying this stock with a stop loss close to say 654.10, and we are expecting that the target for this particular trade could be somewhere close to 722. The second call that we have is again, more from a conservative side, say HCL Technologies, which has already seen a massive decline in last few trading sessions. We have just seen that what we have observed is rather since October last year, this particular stock has been oscillating within an upward sloping channel. And again, we have seen that the lower end of the channel has been tested and it is finding itself a comfortable zone to create a swing. So probably, again, a very good reward to risk here. Stop loss can be placed around 849 and we are expecting a bounce back towards 885. So both from a trading perspective, longs, this is what we have recommended for next couple of trading sessions.
Jay, you're staying away from the index, but any individual stock ideas that you want to share?
Yeah, see, we have a pending price objective of Tata Elxsi, which is still there on the IT space. It's still we still maintain the price objective of about 1250 for it. Last week when we were here, we mentioned about United Spirits, and which was exactly last Thursday. And the next day, the stock was about 22%. And we also mentioned about GM Breweries. This has been GM Breweries has been a long-term target for us. We still maintain a level of about 1200 possibility for the stock. And United Spirits was a short-term trade from last week. GM Breweries still has much more upside potential, but you must be acutely aware at this point of time. Your allocation has to be very, very sensible. Last time we said our allocation is coming down to 45%, 40%. Now this time it's coming down to even 25% of your normal size. So be very careful about it. I think the market still has upside potential, but you've got to be playing it with your existing position. It is rather conservative to play with the existing position rather than allocate fresh money at this point of time.
Okay. Deven Choksi, director at KR Choksi Securities, joins us now. Deven, look at the reaction of Shriram Transport Finance. This stock has moved today. But if you look at the movement over last 1 week or so, ever since market realized that there was no deal happening between IDFC and Shriram Group, the stock moved from 1050 to almost 1300 plus today, close to 1350 in fact, I guess, on day's high. If you look at IDFC Bank also, that moved from 65 to 55 to almost 65. Now the interesting part is that if both of the groups are actually gaining, or the companies are actually gaining because the merger didn't happen, was this kind of a value destroying merger that they were talking about? And what do you really do now?
Yeah, good afternoon, Pradeep. Well, there are few things which I would like to keep an eye on. Initially, when I think this entire merger exercise which was undergoing, at that point of time, IDFC buying into or the taking over of Shriram Group of companies, and I think the discount that they would probably assume because of, I think, taking over of the holding company, it ultimately resulted into some amount of valuation distortion, as I must want to put it across. Eventually, it would have come around and it would have started, I think, giving the better value once the merger would have taken place. Now that the merger is off the books, I think that possible situation, the eventual situation that I am talking about, has actually started playing, and both the companies, as you rightly observed, have started showing, I think, a valuation which is a true valuation. The perspective is now coming up, I think, in a fair manner. Had the merger taken place, there would have been, I think, a different situation on the business model side. If the merger is not taking place, still I think there is a bigger opportunity happening for both these companies on an individual standalone basis. Shriram Group on its own, I think, have got a robust business model already in place, and I think which is further likely to strengthen. And IDFC per se, I think, is having a larger amount of opportunity before them as well. With, I think, consolidation in the banking sector happening, I think this particular bank has, I think, a larger amount of ability to talk about. So all in all put together, I think what you are seeing currently in the marketplace is unleashing of the suppressed valuation which took place, I think, due to the merger exercise, which is now probably, I think, coming into some kind of a normal track, as I would like to put it across.
Just want to add here, Pradeep, the move which you're seeing on Shriram Transport is also on back of very good set of numbers. You saw disbursements growing by almost 26%, and what I was reading was the growth which we have seen is actually being driven by the rural demand. So that's a very positive sign in light of when everybody was talking demon, GST implementation, and even to transition to BS4 was a tough period for all these companies, but good set of numbers. And I believe the stock today's reaction, what you're seeing, is on back of very strong earnings earnings. Well, from NBFCs, let's also speak about the auto space, which has been in focus. Auto sales have slowed down actually in the month of October, as all the big car makers and most two-wheeler makers reported a single-digit growth in October. Is this just because of a higher base last year due to the festive season, or is this a sign for something else? Let's get more details from Yatin Mota, who tracks this space very closely. Yatin, over to you.
Thanks for that, Navneet. In fact, if you look at the last year's base, it was high because of the festive season, which was not as early as this year. So we are dealing with a high base, and on that high base, we have companies like Maruti, as well as select other few reporting good sales growth. In fact, Maruti delivered a sales growth number of close to 9.5%. As far as Bajaj Auto is concerned, they reported their numbers, which were largely in line with street expectations, but we saw a double-digit growth come in as far as the export markets are concerned. So good going for that one. Of course, if you look at other companies, like Mahindra & Mahindra Automotive and Mahindra & Mahindra Tractors, they reported a decline in overall sales. In fact, the tractor sales fell over 10%, which is a double-digit decline. But the management is quite confident that the growth moving forward would be higher, and that is the reason why they have upped the overall agri-equipment sales growth target moving forward. As far as Ashok Leyland is concerned, marginal 3-4% growth coming in for that player, along with TVS Motors. So if you look at the south-based markets, they have remained muted. So barring the two-wheeler space and barring probably the passenger vehicle segment in the listed space, we have the commercial vehicle players which have seen some bit of pressure points when it comes to the growth. Probably we are in a GST transition period, but most of them are expecting a second half to be better in terms of demand and on the back of demand on the new launches.
Let's wait and watch for that. Yatin, thanks a lot for that. But some flashes on your screen. Ruchi Soya, the stock has moved up about 8.5%. Now, they start off with a caveat that typically these news bits, you don't really know what kind of an eventual impact they will have. But here's the set of flashes that we're getting. And there's a pact that Ruchi Soya has signed with a company called Devonshire Capital, which values, and Devonshire Capital will pick up 51% stake in Ruchi Soya, and it values Ruchi Soya at 4,000 crores. The current market cap of the company is 1,030 crores. Now, I don't know about the debt that exists in Ruchi Soya. I'll confess ignorance there. We'll try and dig out those numbers. So I don't quite know about the debt. Though the economic value may be higher or should be higher than the 1,000 crores. But difficult to presume that the debt equity would be 3:1 and the debt would be northwards of 3,000 odd crores. I don't quite know about that. So that's something that we need to bring out. But having said that, the stock is certainly getting excited.
I think I'm just checking on Bloomberg. It says as on 31st March 2017, the total debt of the company is almost 5,922 crores. And you said the
5,922 crores.
Yeah, you said the market cap is how much?
Okay, so the EV is 6,700 crores. I think we need to put that into perspective. This valuation of 4,000 crores.
It has to include the debt. Market cap plus debt will get you the EV
then there is no reason for the stock to flare up the way it has. Devonshire Capital is probably buying this at discount to the market cap. So just be careful when you read flashes of this nature. The scripted the flash on the screen might be saying that it values the company at 4,000 crores, whether it's the EV that has been given out or it's just a pure market cap valuation.
Usually, you tend to take the EV in such deals. I'm not very sure.
Yeah, we don't know what this is about.
But you have to take into account. But I just want to add here, yesterday also the stock was up 18%. Looks like the street was preempting some kind of news. Monday it opened with 10% gains. It's been up throughout this week. Yesterday particularly it was up almost 18%.
Yeah, so just take it with a caveat that it's difficult to value whether this will indeed be EV or market cap based. If it's EV based, then it's probably not necessarily that value accretive. But the stock is active. Who's to argue against? Huh?
If it is market cap based, then it is 5 to 6 times the market cap valuation.
You would probably presume that a company will unlikely to pay such high valuation.
Exactly. You have to include the debt, is what I think. It has to be EV based.
Yeah, we're guessing right now. Yeah, Devin Choksi, by any stretch of imagination, have you ever looked at Ruchi Soya?
Yeah, Neeraj, I think we have been looking into this company earlier. I think of late, I think we haven't been covering this company, so do not know the actual details of it. But what I understand from the business of this particular company is they are highly commodity centric, commodity driven business. And globally, if you have to be successful into this kind of a business, you have to have the global footprints for sure. Now, I really do not know about, I think, this particular transaction enough, but if I understand correctly, Devonshire is a merchant banking business organization, I think, which is operating out of Asia, and they also have the outfits in India, and quite possible that I think by putting in money into this company, they are first trying to revive the business of this company and then ultimately integrating into the other markets of the world. But honestly, I think beyond that I would not be able to imagine further, because we don't have much details either. But the way in which I have understood Juchi's business, I think they need to have the global footprints, and this is such kind of arrangement could only give them the outlet into the other markets of the world. So that could be a positive thing, but let's study more in detail and then probably I think talk and summarize on this aspect.
Yeah, it makes sense to do that. Before we move on to the small cap stock of the day, one quick word from Devin on the PSU rally that we're seeing as well. Devin, government intending to sell out of Dredging Corp, leading the stock, moving up 20% yesterday, another 8% today. What would your thoughts be on dredging, on some of the others which are in the fray to get privatized?
Well, I think the true value would start getting reflected for sure, I think undoubtedly, without going into too much of detail in respective companies, because many of the government companies, despite of having huge potential, haven't been able to encash this potential in the business. And with the government trying to basically get into the privatization mode with the PSUs, these companies would find the newer investors, the newer management in a way, and at the same time I think would allow these companies to actually I think unleash their true potential on which they are sitting on. Dredging is one of the company. Of course, I think you have the entire river linkage plan, you have the entire port development plans in place, and dredging is one such company which has got I think higher amount of business prospects sitting into it. With this kind of divestment taking place, I think true values would come out, and I am sure I think this is going to be a situation for many other PSU companies as well. Most importantly, the global investors, when they come into the country and when they see such kind of massive programs being rolled out by the government, they start discovering the true value based on the potential that these companies are carrying. And that's where I think you probably can argue that the companies would unleash and they would provide I think higher amount of valuation advantage to the investors who have invested into these companies.
Okay. Stay on, Devin, so much more to talk about, but let's talk about the small cap stock of the day. And Nikki Mirchandani joins us with what's buzzing in the small cap space. Nikki.
The stock we are going to be talking about is UFO Movies. Now the stock has gained as much as 10.4% for the day. The volumes are high, 16 times the 30-day average volumes that you can see. The trigger that's behind the stock is Chennai-based Cube Cinema is going to be merging with the UFO Movies. Now if you look at the parties, the ratio is on a relative valuation of 63.6% for UFO Movies and 36.4% for Cube Digital. Well, the parties to the transaction include UFO and its subsidiary for that matter. The subsidiary name is PJSA Technology. Cube Cinema and its group companies are the other bit of the transaction. Now the steps that are going to be involved into this is, first, Cube Cinema is expected to demerge its technology solution business in audio, video and film into a digital cinema advertising company. Now ICICI Ventures, in the step 2 we have ICICI Ventures and UFO, which is expected to buy the stake in Cube Digital from PE investors. Now this business is expected to then later on, that's the third step that we're moving to, merge with the UFO Movies. Now the PE firms that are involved in this transaction is UFO is backed by PE firms Providence Equity Partners, while Cube is supported by Nomura and Nomura Intel Capital. The purpose of this transaction is pretty much to solidify the merged entity position in country's digital cinema distribution and in cinema advertising industry for that matter.
Okay, thanks a lot for that, Nikki. So watch out for UFO Movies. That stock is up about 8% in trade. Now, I've got a couple of charts here from the Bloomberg terminal. I've got a couple of charts from the Bloomberg terminal here to show you, and that is on the stock of Edelweiss. I should bring up Edelweiss on the screen as well. That stock is up about 6% or 7%. So has hit a life high in today's trade. Now this is Edelweiss. It's gaining for the 6th straight day. And if you look at the intraday movement on all the 5 days, the preceding 5 days, you would see that Edelweiss has not had a big dip. And in today's session, this is today's intraday chart, Edelweiss has clocked in fresh life highs, about 306. But currently on closing basis, it will hit highs as well. So this is good going for Edelweiss. I just thought we'll get up the relative comparison of Edelweiss versus a bunch of other companies and just try and show you all the parameters of Edelweiss. And this is a slightly difficult chart to look at, but it shows you everything that you need to know about Edelweiss. In today's session, this block, if you look at it, the average volumes substantially higher, or today's volume substantially higher than the 20-day average volumes. It's valued at about 6 times price to adjusted book. The EPS is about 10 odd rupees. The event that we're talking about, earnings coming up in the next 10 days. So you will see the earnings of Edelweiss coming out in tomorrow's session. So that is something you need to watch out for as well. And consensus ratings, 9 buy calls, not a single sell call. So the street is extremely bullish on Edelweiss Financial Services. Looks hunky-dory for now, hitting new highs as well, results tomorrow, and in the right space as well. Devin Choksi, the question is, when you are in that lane, when everything is going right for you, maybe you are not in the right lane because you got to take things with a bit of caution. What about companies like Edelweiss or some of the others, brokerage stroke NBFC stocks?
Well, on one side, I think all of these companies are sitting on a huge potential, undoubtedly. Kind of franchises that they have created are significantly large potential oriented and franchises, be it a mutual fund franchisee, insurance franchisee, NBFC franchisee, brokerage franchisee, investment bank, or for that matter proprietary desk. Each and every aspect I think you see it's a typical bank I think which you can think about and talk about. And given the kind of growth that we are seeing in the country with the new funds coming into the country, probably each of these particular verticals would have higher amount of investment to attract. And that's where the market is more positive about. Currently, I think in most of the companies, the market is giving higher or the premium valuation also in some of the cases is largely because these businesses which these companies have built up, they are now finding the prospect of inviting higher amount of investment and further growth. And that's where I think you are likely to see the valuation unlocking also taking place in some of the cases eventually. May not be happening across the board for all the verticals at one go, but maybe I think a couple of years down the line you should be seeing gradual opening up of the valuation exercise coming in for them. Maybe market is inviting a lot of money, and that's where I think you want to park this money into some of the quality franchises, and that's where likes of Edelweiss, Motilal kind of companies are attracting more investors. Don't know whether I think one would put money right away into and chase them, but definitely keep an eye on the developments and see the opportunity if at all it is available to you.
All right, Devin, we'll leave it at that. Now, thanks a lot for joining us today and giving us your views on the markets. Let's do a check for the European markets, which are actually a bit of negative trade seen there ahead of that all-important meeting of Bank of England. Let's see if there is a rate hike which comes about or not. So you can see CAC, DAX, FTSE 100, all three of them are trading just about with minor losses, and that's precisely got to do with everybody's been waiting for that meeting. Let's see if any sort of rate hike comes about or not. But on that note, let's also get you the Fab 4 stocks of today. And as usual, Yash Upadhyay joins us with the same. Yash, over to you.
Good afternoon, Navneet. So, Hexaware Technologies is making big moves today. The stock has gained the most since December of 2010, so almost a 7-year high for this one, gaining close to 13.5% after the company reported a strong set of Q2 numbers. We saw net profit increasing by as much as 16% on a quarter-on-quarter basis to almost 140 crores, while EBIT margins too saw healthy expansion of almost 110 basis points. So, good news there for Hexaware Technologies. Rain Industries is up almost 6.5% after Motilal Oswal initiated coverage on the stock with a buy rating and a target price of 362 rupees, indicating an upside potential of almost 33% from previous day's close. Moving forward, we have Dredgen Corporation. Now, this stock has been up for a second straight day, gaining close to 30% in that period after the Union Cabinet approved the proposal to sell its entire 73.5% stake in the company, with reports suggesting that the exchequer is likely to earn almost 1,500 crores. And lastly, we have Solar Industries. The stock is sitting at gains of around 3%, but had surged nearly 6.5% intraday after the company said that it has received an order worth close to 1,100 crores from Coal India for the supply of bulk explosives.
Well, thanks a lot for that. So Solar Industries, though, has come off from the 19% first tick on the pre-open rates that it showed. So 3% higher, but still, nevertheless, doing okay for itself in the session today. You know, the interesting one is Rain Industries. That one is up another 7% today. Has not lost anything in the last 5 or 6 or 7 odd weeks. It's had consistent gains over the last 7 odd weeks as well. So really good going for each of these names. Jay, I know you're not too bullish on the markets, but if you can pull up a chart of Rain Industries, I don't know if you've looked at it, but almost everybody would have, and I would probably even ask Sachidanand to do that. But first to you, Jay, Rain Industries, is it possible to predict more upside on this one based on charts?
See, basically the chart has gone parabolic. You know, when the markets are exploding in such a fashion, you know, purely from a risk-reward perspective, it may not be, prudent to buy at this point of time. But definitely, it seems to have much more upsides to come through. But you know, you got to wait for a pullback for you to take a sensible amount of risk. Yes, the move is not ending at this point of time. There's still much more upside to come. But I would expect this stock to give a pullback somewhere close to 235 odds. If it does that, that will be an ideal re-entry point, and your risk will be very controlled at that point of time. But as it is at this point of time, the move is not ending. It's got much more upside to come through, but I'll wait for a buying opportunity.
Well, the other stock which has moved at day's high is Power Grid Corporation. Remember, the company will be coming out with its quarterly earnings today. Ahead of that, there has been some substantial moves. The stock's now up almost gains of 2.2% seen there. The other stock which I want to highlight is Union Bank of India. That's the counter which has seen major cuts. In fact, that's your top loser when it comes to the Nifty PSU banking space. Remember, the bank comes out with its earnings tomorrow. So ahead of that, clearly there has been some sort of weakness which is coming for Union Bank. Sachidanand, just on the chart, both these stocks, Power Grid or Union Bank, do you see any trade?
When it comes to Union Bank, I think one should really avoid since the stock would be posting its results tomorrow, and there's no sign of any fresh pattern getting developed. But if you look at Power Grid, this is one particular stock that could show us some momentum in the coming trading sessions itself. If you look at the recent formation, the stock has been consolidating between 218 and 210, and this particular consolidation now looks mature. So I think there's a substantial move towards 225 which can be unlocked now, and probably a stop loss can be placed somewhere close to 210, which is the lower end of this particular band, and long positions can be initiated at this point of time.
Okay, so that's the call really coming here.
Pradeep, look at what's happening with Infibeam. Just an amazing move today for this one. It's up about 20%. The other one giving it company, guys, is 8K Miles. We keep on talking about Rain Industries and some of the others which have moved n number of days. 8K Miles is up 15% today. But I don't know if you guys, either of you guys remember, I think I've seen 8K Miles being in a big band of green for a really long time now. The 1 month chart of 8K Miles should be really interesting. I wouldn't be surprised if it moved up over 50. Okay, yeah, look at that. 1 month, 120% for 8K Miles. That is stupendous gains. This is something that Reliance did in a year. Not comparable, but I'm just saying, it's just a big move on 8K Miles. 120%.
But Neeraj, Infibeam is quite interesting. Look at the volumes. 2.6 crore shares traded on NSE compared to 57 lakhs which were traded just yesterday. Since it's in the futures and options market, so there is no circuit limit here. But if you could just pull up the futures, there has not been any sort of fresh long build up there because open interest is just up between 2 to 3% for a stock which is up 21% is very hard to believe. But it looks like to me, once again, a candidate to watch out. What's the delivery data today? Because it looks to me that it's more of cash-based buying, or a 20% move can be speculative trading, which one can call it in today's trade.
Let's ask Mayuresh Joshi if he has any idea about 8K Miles, or for the matter Infibeam, that the product that they're making is fairly well accepted. But Mayuresh, we're starting off with small cap, mid cap, IT/IT related companies. Infibeam, 8K miles. Any thoughts?
Not specifically cover that, but I did like your comment in the proportion that it has moved greater than what Reliance did over the last so many quarters or years. So yes, I think the move for all these stocks has been exemplary. But going forward, I think, as I said, I think I'll be very, very specific within the mid-cap IT/IT space. Exaware did post a very good set of numbers yesterday, so that was an encouraging sign. And though currency appreciation might just play truant in terms of how the hedging for their currency book might happen in terms of an earnings profile, I think Cyient is something that I'll still continue to prefer within the mid-cap IT space. The logic is very clear. I think the services business expected to grow in double digits, DFM expected to grow in double digits, and margins expected to remain stable. So no taking away from Infibeam or the other company, but yes, I think being selective, Cyient and even Exaware going by numbers, if they're able to replicate that in the next quarters to come, I think a re-rating is definitely there on the cards.
Okay. Jay, if you have looked at any of these charts, the stocks, the technology stocks that Neeraj or Mayuresh have just mentioned, technology could really be a place to hide in any incoming correction that you anticipate. What's your view?
Yeah, fair point. We've been bullish on technology since it was the Nifty IT index was about 9,500. And we said it's going to hit to 13,000 on the Nifty IT index. But what the problem has with the IT index has been there's no heavy lifting happening from the frontline stocks. So it's been the second line stocks which has been doing the big moves. And we need a TCS or an Infi or an HCL Tech to give the boost for the index to touch 13,000 levels. I don't see that happening. Probably once the market starts to correct, probably it will start to become a hiding place, and maybe at that point of time you might get the lift from these frontline names. As far as Infibeam is concerned, yeah, it's a fantastic stock from a chart perspective. I think it still has potential to scale somewhere close to 180 to 200. But we don't like to enter at such high entry points, like 20% upside on those. If you notice, all our picks have been at a point before the markets have always started moving. So from that perspective, Infibeam is not an entry point for me. I would rather wait for a correction, but make it clear that it's upside potential of about 180 to 200.
Well, thanks, Jay, for joining us today. And let's look at Natco Pharma numbers that have come out. I think they're more or less in line with what we were expecting, whether you look at top line or bottom line, Navneet, right?
Yep, and the numbers, the profits are actually what you said, 84.4, which is in line with Bloomberg estimate. The revenues have come in at about 427 versus Bloomberg estimate of about 429 crore. And the stock's actually doing well. It's up 2.6%, inching very closer to the 4-digit mark at 997. Two other stocks I want to highlight. Let's just pull up the intraday chart of REC and PFC. Both these stocks have seen some sort of buying momentum coming about, and both of them are currently trading at day's high. Look at that. REC is up almost 5%. PFC is also at day's high, which is seeing gains of almost 3.5%. Sachtanan, on the charts, I've just been observing both these stocks are pretty active in the past few trading sessions. Would you recommend taking any fresh positions here?
Well, I would like to give a disclaimer. We have already initiated some long positions in the morning, and we were expecting around 185 kind of a target. I think the way this particular momentum has built in, I think it will just surpass the levels of around 185, and probably we may see 188, 190 kind of levels in the coming trading sessions. So probably the mood is very much right, and the way it has broken out from the pennant formation, there is still scope for further upside. So probably in case one needs, if someone is interested to take fresh long positions, I think a stop loss can be placed now at around 177, and long positions can be still initiated for a target of around 188.
Okay. Now that time of the show when we asked Navneet Saluja if there is any stock which is likely to come out or go into the F&O ban. Remember, this is not certainty. This is at best some study and some intelligent guessing on what could happen in tomorrow's session. But Navneet, What do the data suggest?
Two stocks, Neeraj. One of them is India Bulls Real Estate, a counter which came out of F&O ban just 2 days back. If you go by the November futures and also on the option side, net there has been an addition. And if you look at yesterday's data, the total open interest on the F&O side was almost 92%, as if you compare it to the market-wide position limit. For a stock to enter into F&O ban, it has to breach the 95% mark, and it looks like it can breach in today's trade, since net there has been an addition on the future side. And similar is the case for the other counter, Reliance Communication, which may just enter because that was also 92% yesterday. If you could just pull up the futures, Reliance Communication, as you can see, open interest has gone up, but major addition today has been seen for a couple of option strike. And remember, when you talk about the total open interest in the futures and options market, we club both the futures as well as open interest from the option side, Neeraj.
So India Bulls, actually, if you look at last several months, it spends more times into ban.
I think it's going to take breather. Just the second last month after December, it's not going to be in the derivatives market.
Yeah, that's cool.
Actually, but look at what happened to Ruchi Soya finally. It's back to where it was. Yeah, 29.30 is the price that I can see right now.
Yeah.
29 was where it started. You know, when the news came, it went all the way up to what, 34, almost 34. I think
people have been reading our tweets.
Yeah.
People have been reading our tweets.
And I hope they were, because then they must have got an exit. Otherwise, now you look at it.
Yeah.
This is a classic trap for, day traders.
Yeah, classic trap for day traders.
You could get in, but you can't get out.
Right. Yeah. By the way, guys, Hero MotoCorp numbers are out. The October total sales at 6.31 versus our estimates of 6.55, if I'm not wrong, and versus an actual number of 6.63. So October is not turning out to be a great month for a lot of companies. Bajaj did okay. Hero is not done okay. Let's bring up that stock and see if there is any kind of small trading reaction, if you will. Don't quite look at these numbers or this reaction and believe that this is the definitive way in which the stock is going. But suffice to say that October sales haven't been particularly strong for Hero MotoCorp. I liked what Yatin assessed, quite frankly. I don't know if Mayuresh thinks in the same way or not. But for a lot of these auto companies, because of the push that they had given to their sales in this whole transition to BS4 and otherwise, in the preceding months to the festive season, if a lot of people which otherwise would have bought only in the festive season have gone out and bought the vehicle already, how can you have a terrific festive season as well, which of course again was split into two. So maybe that could be one reason why, being the larger festive season, which is Diwali, wherein you presumably have more sales as opposed to the Dussehra, you've had a fairly tepid month of October. Bajaj Auto also, domestic sales were very okay. It was essentially exports which did well. So that was what I believe Yatin had mentioned at the start of the trading day today. I quite like that assessment. Mayuresh, I don't know if you agree with that or no, but you have to agree with me on one thing, that auto sales for the month of October at least haven't really set the stage on fire.
Well, they haven't, and I think there was a general feeling that the numbers would be a little bit soft, and maybe at the end of the third quarter it should start again picking up, assuming how the entire Rabi season starts picking up. So in that sense, again, I think if you look at rural demand and urban demand, parts of urban demand are still holding up. Rural demand is something, as I said, over the next few weeks, I think the latent demand should start picking up. Third, again, I think in terms of the input cost inflation, because steel and aluminium prices have moved up significantly. So I think the price realization pass-through in terms of the end products have obviously gone up. I think it doesn't create a huge amount of dent in terms of buyer demand. But what it really does is, as you rightly put it, I think a lot of the demand probably did come through in the previous month. So I think it is expected to be soft. But one really needs to take a larger picture and a larger canvas in terms of volume growth, and then have a sensitivity analysis done in terms of how margins are expected to pan out, arriving at your EPS figures. So earnings expected to hold good, in my opinion, for two-wheeler auto companies over the next 1.5 to 2 years. You might see periodicities where you have softness in volumes, but over a longer period of time, I think it does average out. So again, I think I remain quite positive on this space, very stock specific, but positive on the space as a whole.
Okay, it's time to take a look at what dealing rooms are recommending in the session today. Darshan and Yatin join in with their channel checks. Gentlemen, good afternoon to both of you. Darshan, let's start off with you. What are you picking up from your dealing room sources?
I think Sun Pharma is something that, I heard in a couple of dealing rooms after what's happened with the Divis. The expectations of, Halol getting cleared is something that is doing rounds, and Sun Pharma is trading pretty much with a positive bias today. So Sun Pharma is the first counter dealers are talking about. Jain Irrigation is 5% up, but there is a buzz of a potential order win that could come in, so that is something that we heard. And finally, Ujjivan will come out with numbers most probably after market hours. They say that the numbers probably will be better than expected, and they believe that the commentary also will be better. So they believe that this quarter probably will mark the worst for Ujjivan, post which they believe that the positive commentary will start. So that's what we are hearing. Yatin, what are you hearing?
Neeraj and Darshan, pharmaceuticals, it's a pharma day. So from Divi's to Biocon to Sun Pharma, everything is doing well. Biocon in particular, that is one stock wherein dealers have been quite hopeful that there could be some positive development on the Bangalore plant front. Stock is up 5%, and dealers indicating that domestic funds are again buyers in trade today for Biocon. Apart from that, watch out for Aditya Birla Capital. After long, we have seen some price action and volume action in the stock, up 5%. Dealers are again expecting a 5 to 7% short-term upside as far as this stock is concerned. And finally, watch out for E2Z Infra Engineering. We have been talking about this stock a couple of times in the dealer segment. Today the stock is up 12%, and there was a big block deal around 38 levels at which a lot of HNIs have bought in shares. So on the basis of that speculation, dealers are expecting further upside as far as this stock is concerned.
Thanks a lot, Darshan, as well as Yatin, for getting us that dealing room check. Interestingly, we were discussing, Neeraj and I, out of the 6.3 lakh vehicles sold by Hero MotoCorp in the month of October, Pradeep, 3 lakhs were sold on the day of Dhanteras. So 50% of the sale which happened just happened on one day. But Hero MotoCorp, I think it has reacted negatively to its numbers. As of now, it's trading at levels of 3724. Well, as we near end of today's trading session, let's also take a look at the key factors to watch out for tomorrow's trade. And Saloni Dhanuka joins us with all the details. Saloni.
So, well, Navneet, before talking about the key events lined up for tomorrow, we will be keeping an eye on Bank of England's policy meeting today, which is scheduled for today evening. Now, where the bank is expected to raise interest rates for the first time since 2007, so it will remain a key watch for overall currencies market. Now, for tomorrow, we have just one Nifty company reporting its second quarter earnings, that is Hindalco. Now, other key earnings that we'll be keeping an eye out on is Edelweiss, BSC, Godrej Agrovet, Godrej Properties, Tata Power, Titan, Torrent Pharma, as well as PFC. Now, mind you, few of these companies are trading up over 2% each ahead of their earnings tomorrow. On the economic data front, India, China, UK, as well as US is to release services PMI data. Now, a reading above 50 indicates expansion, while a reading below 50 indicates contraction. Additionally, US is to release non-farm payrolls data. And lastly, back home, we'll be keeping an eye on weekly foreign exchange reserves data. It will remain a key watch for currencies market.
Thanks a lot for that, Saloni. I might add one more thing. I think Novelis results will be out today evening. And if you pull up the stock of Hindalco, it's just gained a little bit in the last few minutes of trade. So watch out for that one too. What Novelis does could well have a bearing on how Hindalco reacts in tomorrow's session. A bit of an uptick coming in from the lower levels for Hindalco. No such luck for the markets though. They continue to stay tepid. Hardly any movement there.
Saloni mentioned Titan's coming out with the numbers tomorrow. Look at the stock. It's touched 52-week high today. It's trading at those levels of 656. So good move ahead of the numbers. Look at that. It's trading at day's high. Titan. Sachtanan on the charts. Anything on Titan that you're spotting? Sachtanan, any?
Well, certainly, it looks like.
Go ahead.
Yes, we are expecting that this particular consolidation, which was, which was there, in fact, the level of around 650. Has acted as a very strong resistance, and I think this particular resistance could be breached, and we may see a move right up to say 700, 705 in next couple of trading sessions. So I think it's a very mature move, and we are expecting that this particular momentum should continue. So I think a stop loss can be placed somewhere close to 640 with an expectation of a move towards 705.
Okay, it's 320. Let's get in the top closing strategy first. Sachidanand, if you had to bet on one stock as a BTST or STBT, which one would that be?
Well, the way Titan is shaping up right now, I think it will be safer to bet on something like Titan. The way it has reacted towards the resistance level. So probably we may see an extended move in this particular counter itself, and we may see this move getting unfolded in tomorrow's session itself.
Okay, look at some of these construction companies in the last few minutes, especially. Look at Ashoka Buildcon or Sadbhav Infra, KNR Construction. They've all moved up with interesting volumes over the last half an hour, especially if you look at it, Sadbhav Infra. So it was almost flat and then it has moved up quite a bit. Mayuresh, do you like any of these stories?
Yes, Pradeep, I think we have discussed KNR, Sadbhav on your earlier shows. And the premise here is again very, very clear. I think the kind of order book that these players are sitting on and the kind of execution capabilities that they have displayed so far, there is no reason to believe that they will not be able to probably carry on these executions even with a greater burgeoning order book. So as orders flow into their kitty over the next few quarters and as execution improves, I think the IRRs are going to improve significantly. KNR, for example, has a very, very strong balance sheet. So I think they'll be able to execute projects even without increasing the leverage on their capital substantially, and that will substantially lead to greater ROEs. So yes, I think I have liked these stocks, Sadbhav, KNR. I do continue liking them.
Well, a couple of other counters from the broader market. Let's just pull up GHCL Limited. That's up almost 9.5%. We've also seen, Pradeep's already highlighted Ashoka Buildcon. UCO Bank is the other one. Let's just pull up that one as well. GHCL is already trading at days high. UCO Bank, the surge has come in the second half of the session. That's trading with gains of almost 7%. But what about Idea? That counter was up yesterday. A rub-off effect was seen after Bharti Airtel reacted positively to its numbers, and Idea has seen gains of almost 8%, trading at days high. Mayuresh, what are you making of the moves that one is seeing in the telecom stocks like Bharti or Idea?
So as I said, I think the whole recommendation for Bharti at least continues. Clearly with consolidation happening in the industry, even though you're seeing high leverage still getting played out, tariffs still remaining extremely low and competitive and expected to remain that way over the next few quarters, leading to lower ARPUs. I think the data usage has gone up substantially. So if you look at Bharti Airtel's numbers and the kind of data consumption that one really sees, I think that is one encouraging sign. Again, I think with the kind of cash flows that one can expect over the next 2 to 3 years to improve, though I think a lot of capex will still be spent. I was hearing the Bharti promoters and they were expecting a capex of 25,000 crores earmark for this fiscal, a lot lesser in the coming fiscal. But I think the OPEX will still remain on the higher side, but the markets are probably looking at consolidation, adding of new subscribers, bottoming out of ARPUs, and that is where the entire premise lies. I'll not be outright buying these stocks at this point of time, but anybody holding on to these stocks, something like a Bharati definitely should be held on to your portfolio.
Well, by the way, 8K Miles has now surpassed Infibeam as the top gainer on the Nifty 500. It's 8K Miles is up 20%. That's some move on this stock. Hexaware is closing in at the highest point of the day, and Dredging Corp 2 has inched up from where it was about half an hour ago. So it's now up about 10.5%. But I think the real move has come in GHCL. If you can pull up that stock for the benefit of our viewers, GHCL should come up on your screen. 10% higher, 252. So after the result disappointment, this one has come back with a bang. Good going really for this one. Any thoughts here, Sachidanand, on GHCL?
Well, we've already seen a sharp surge. In fact, the way it has reacted from 240 levels in the last couple of minutes, I think we may see this particular move getting extended towards say 265. But I think 265, 268 could be a very difficult hurdle for this particular stock. So it will be safer to assume that this momentum could continue right up to 265, but a follow-through move beyond 270 should be reviewed. So as of now, I think one should, if someone is long, I would suggest that he should maintain his long positions and review the stock once about 270.
One last question maybe before we start the market wrap. You know, Divi's lab, if you look at the kind of movement it had, there was an up move, a gap up, and then start moved all the way to 1110, I guess that was the day's high, or 1117. And from there it has corrected. Now, is there a technical stop loss level you'll be watching out for today or in tomorrow's trade for anybody who has bought into it, today after the gap up?
Well, I think one needs to maintain today's low itself as the stop loss, especially in this particular case. If you recollect, like 22nd September, the stock had seen a high somewhere close to 1004, and from that level, it did see a meaningful correction. Now, this entire correction patch was taken off in one single day's movement itself. So, I think it is safer to assume that today's low, which is somewhere placed near, say, 1016, it should be maintained as a trailing stop.
Okay, let's go across though. Gentlemen, stay on. Mayuresh, Sachidan, we'll take some final thoughts from you. But now very close to market close timing. Let's head across to Navneet, kickstarts the market wrap. And Navneet, suffice to say, it's been deceptively quiet for the headline levels of the indices.
That's right, Neeraj. The market took some sort of breather after yesterday's record high level, especially the benchmark indices. So Nifty is going to close still above the 10,400 mark, a cut of only 16 points. Sensex going to be closing with cuts of almost 41 points. Bank Nifty was the one which was in focus today, being the Bank Nifty weekly options expiry. Remember, we highlighted the expiry could take place in that range of 24,300 to about 550 thereabouts, and that's where we've seen the expiry coming about. Some bit of outperformance from the broader markets. The Nifty Midcap Free Float Index is closing with gains of almost 0.3%, and outperformance actually coming from the Small Cap Index, up almost 0.7%, and the BSE Small Cap Index too has seen gains of almost 66 points. So it has been a stock-specific market is what we can see. But let's just look at a couple of gainers and losers among the Sensex constituents. More of red is what you can see on your screen. But let's start off with the gainers. Clearly, this was the day for the pharma stocks today. So Lupin, Sun Pharma were your top gainers. Power Grid will be coming out with its numbers anytime. That counter ahead of the earnings was up. Coal India, Dr. Reddy's, Bharti Airtel were a couple of other gainers. And from the pharma pack, you also had Cipla, which was up. The heavyweights, not to forget, ICICI Bank, TCS, HDFC, all three of them managed to close the day in the green. On the losing side, Hero MotoCorp is your top loser with cuts of 2.5%. Well, the October sales number did not excite the street at all, and you had from the consumption space ITC, HUL, which were down, and the heavyweight State Bank of India, which surged almost 4% yesterday, saw some bit of profit booking coming about. Pradeep.
Yeah, if you look at mid-cap and small-cap, there are a good number of stocks to pick up from, but I have tried to spot a few names that were actually moving in last hour of trade. Look at Jan Irrigation and Jan Irrigation DVR. Both these stocks moved up in last hour of trade as well, and you can see Jan Irrigation closing with gains of roughly 5%. Look at Sadbhav Infra. Sadbhav Infra was another interesting stock that gained towards the end of the session. CCL Products was yet another counter that I have spotted, and also HFCL. This stock has seen a momentum after a while actually in today's trade, and is actually closing at 5% upper circuit. 8K Miles, we talked about it in today's trade. Om Metal Infra, that is yet another small cap that moved up towards the end of trade. And where is it closing finally? 10.5%. AdLabs Entertainment, this was a late mover. Towards the end, it closed with the gains of roughly 8%, very close to today's high actually.
If I can take the liberty of pulling up two stocks on the wall, and two or three names which moved to new all-time highs for themselves. This is of course the market close, but look at Titan. And Navneet was speaking about it, and Titan towards the close of trade surged and hit fresh life highs for itself. So good going for Titan. Good moves for Symphony, that's the other one at 1588 or 1590, that's hit fresh life highs for itself. So good going, one post numbers and one ahead of the numbers, but essentially the surge coming in the last few minutes of trade. However, the picture at close, I think even Stevens for the green and the red, enough number of heavyweights which fell both in both aspects, both the green and the red. So this is the contribution really. Some gains coming in from pharma in particular, so Sun, Aurobindo and a few others out here in this pack. Bharti, Idea is not a part of the index, but Idea also did well. ICICI Bank about 4.5% higher, hitting some gains. But the losers continue to be the same, I think. Well, SBI actually moving on. It was in the green side yesterday, amongst the top losers today. ITC, a heavyweight, down about 10 points as well. So not a great day for this one either. And if you can just, this is the market breadth, of course, which is more or less even Stevens. I mean, 20 stocks, nothing much to choose about. So nothing much to choose about from the advanced decline ratio. I just want to bring up the heat map once and just show you whether it was even Stevens or no. And you probably see by and large, it was even Stevens. But Pharma, aided probably by what's happened to Divi's and the approval that they got on Reddy's, Sun Pharma, Lupin, Aurobindo, clearly showing that it was all about pharma in trade today. The broader end of the spectrum punctuated by a number of stocks which gained, but in the large cap space it was pharma on one side, to an extent Tech Mahindra and a couple of other losers on the other side.
Well, that was the closing, but how should one be approaching the markets tomorrow? Let's get a technical view. Sachtanand, what kind of positions would you take in tomorrow's trade on Nifty or Bank Nifty?
Well, as we discussed at the beginning of the show, like we are expecting that this particular leg could be the final one, and the headroom is still open right up to say 10,540. On the lower side, a critical point would be a close below say 10,390, and in case if that particular thing happens, then we can say that the entire up move that we have seen so far from 96.85 has been terminated. But the chances are that we may see one more move probably on a gap up side, and that could be qualified as the exhaustion gap or a buying climax that could occur. So we are optimistic for next couple of trading sessions where we expect the markets to see levels of around 10,540, and the rally could terminate there.
Okay, Sachitaran, we'll leave it at that. Thanks much for joining in. Mayuresh, by and large the commentary seems to be don't invest fresh money. If you have existing positions, maybe churn them around. Let's assume somebody is willing to churn around positions. What can he bet on? Is there anything that you are making an investment afresh within your portfolio schemes?
So nothing in particular in that sense, Neeraj. But again, I think with the entire recapitalization story playing out, I said a few PSU banks are looking interesting over the next 1.5 to 2 year landscape. So Indian Bank is something that I've discussed. Vijaya Bank is the other one, which can be a dark horse candidate within this entire PSU lot. If one really looks at the profile and if one really assumes over the next few quarters resolutions taking place, asset quality pressures easing off, I think Vijaya Bank can be one strong candidate over the next few years which can emerge as a winner. As I said, over a longer period of time, I think being very, very selective on certain mid-caps or specialty chemical stocks is somewhere where I still feel because of a lot of pressures that the Chinese suppliers are facing, both in terms of effluent discharge, employee and power costs going up significantly. I think the advantage is definitely shifted to Indian players. So Shri Pushkar on any given day on declines in a staggered way is something that I'll still be looking at over a longer period of time. Similar is the case for Bodil Chemicals within this space itself. And again, I think abrasives and ceramics, I think this is one space that I've liked. I continue to like that. Very few listed players, the unorganized players, market share and pie would probably start coming through over the next few quarters. So Carborundum is something that I'll still continue to prefer. I think a very good set of numbers by Carborundum. So if they're able to continue their delivery over the next few quarters, I think a re-rating is definitely on the cards over the next 2 years in terms of an earnings profile.
Fair call, Mayuresh. We'll leave it at that. Thanks much for taking the time out and joining us. I appreciate you taking this this effort and be with us on Bloomberg. Quint, take a break on that note. Come back and tell you all about what's happened during the day's trade today.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're watching Countdown with us on Bloomberg Wind. Let's take a look as to how the markets panned out. Clearly, after touching those record high levels is what we saw some bit of breather for Nifty as well as Bank Nifty. Bank Nifty had its weekly options expiry day, so a bit of volatility there. So both the benchmark indices closing the day in the red, but no major or no sharp cuts were seen there. A bit of outperformance seen from the broader markets today. Let's just pull up the advanced decline ratio, which I believe was just about even Steven on National Stock Exchange. That's the advanced decline ratio. Actually, towards the end, you did see it going in favor of the declines. But let's look at a couple of Nifty gainers then. You had clearly the pharma pack, which came back in action today. So your top three gainers are the pharma counters: Aurobindo, Lupin, Sun Pharma. In fact, you have 5 pharma constituents in Nifty and all 5 are up and about. Cipla as well as Dr. Reddy's also good gains in today's session. Besides that, HCL Technologies, Bharti Airtel continued its run on the upside. Coal India was up and about today. On the losing side, Tech Mahindra, which reacted negatively to its earnings, that counter was your top loser, down almost 4%. Hero MotoCorp fell in the second half of the session. The October sales number came, which were not too exciting. Bharti Infratel was down 2%. Cool off seen for the PSU banking space. So your heavyweight State Bank of India as well as ITC saw some bit of cuts. But clearly, Pradeep, it remains a stock-specific market, and there were a lot of gainers in the broader market.
Yeah, so in fact, market breadth kind of worries you because, towards the second half, you almost had the negative market breadth. But try and spot some of these stocks, and that is what I was trying to do, that moved up in last hour of trade. There was Jain Irrigation, Sadbhav Infra, you had AdLabs Entertainment, you had Om Metal moving up. But if you try and find some such similar losers, I couldn't find any significant name. So people were actually, the traders were actually buying towards the end and not really selling. Of course, there was this classic trap that we had in today's session. That was Ruchi Soya that went up from 29 to 34 and came all the way back down to the lower level, and the confusion that was there for a while with regard to what kind of payment is actually coming in with that stake sale. But as company has clarified that the 4,000 crore is actually for acquisition of certain segments, and it will be utilized to repay the debt. So the money is not going into equity shareholders' pocket really.
Well, let's also take a look at how the European markets are faring in today's trade. Ahead of the crucial Bank of England policy decision, Governor Mark Carney may announce the first rate hike in over a decade. Bloomberg's Jan Potts joins us right now from our studios in London. All eyes on the BOE, Jan. No surprises there.
Yes, very much so. Good morning from London. A bit of a mixed picture on Europe's equity markets so far this morning. Lots of investors' attention is focused across the Atlantic, looking at the United States. The dollar trading lower today and Treasury yields holding steady as investors digest the news that President Donald Trump is poised to name Jerome Powell as the new boss of the US Federal Reserve. But focusing on the equities story, we're just over 2 hours into Europe's equity trading day, and the benchmark Stoxx 600 little changed so far this morning, with real estate stocks and banks outperforming. Travel shares the laggards today. Oil trading close to $54 a barrel today as US crude stockpiles resumed declines, but with production expanding. Meanwhile, industrial metals are pairing some of those gains they made yesterday. Big rally yesterday. The pound sterling also giving up some of its earlier gains from this morning, with the Bloomberg Pound Index now trading down 0.2%. Now that's, of course, as investors await for that Bank of England rate decision due in just under 2 hours' time. Now, with inflation above target, markets are pricing in a hike from the current record low of 0.25%. And if the bank does move, it will be the first time that's happened in the UK, the first increase in the UK for more than 10 years. Back to you.
All right, Jan, thanks a lot for joining us and giving us an update as to how the European equities are trading well. Ahead of that all-important crucial Bank of England meeting, looks like there is a bit of nervousness there, but you've got a couple of earnings coming there as well. We've seen the reaction. But Pradeep, you want to take a guess whether there's going to be a rate hike or not? It's been a decade.
Yeah, so ever since the financial crisis of 2008, Bank of England hasn't really hiked. And I think the European Central Bank has also not done that. US managed to do it after a long time. So the Europe and Britain, both these central banks are actually lagging or following the US policy with a lag. So that is what we have clearly seen. And now it seems BOA is prepared for a rate hike finally. But, the market experts would tell you that when central bankers turn bullish, they hike. So should you really worry about it, or should you feel happy and you should also turn bullish on equities and economy maybe?
All right, we'll have to wait and watch out for that. We'll be getting the decision in few hours from now. But let's move on. Earnings pickup is likely in the third and fourth quarter on resurgent rural demand. That's the word coming in from Gautam Duggar of Motilal Oswal. Earlier today, in a chat with Bloomberg Quint, he further states that along with the defensive space, PSU banks are all set to make a comeback. Here is an excerpt of the conversation. Listen in.
Earnings which have come are largely in line with expectations. We've not seen any major disappointments banning one or two companies. So when I look at my universe of companies, out of the 190 that we had estimated for, almost 90 have reported. So if I look at the numbers excluding OMCs, the numbers are in line with expectations. Some of the disappointments are there. Obviously, in private banks, we saw a holler of a number from Axis Bank. We saw some disappointments coming from IOC in Tata Steel. But keeping that aside, sectorally, if you see, cement has been better than expectations. Auto is progressing in line. Consumer has been actually while the numbers, headline numbers are in line with expectations, the commentary has been far better. So, and obviously we've seen telecom numbers. There seems to be an expectation that things are bottoming out even there. So it's a mixed bag actually, but on an aggregate basis, so far the number seems in line with expectations. If you keep aside the volatile, companies like OMCs.
So does that leave room for upsides? I mean, my basic question then would be, if this quarter essentially turns out in line with estimates, are you factoring in much better earnings growth quarter 3, quarter 4? Yes,
obviously, because in Q3 and Q4 you have a low base of demonetization, plus a lot of GST related disruption would have settled down, and there is an expectation that demand pickup has happened and economy itself is bottoming out. I mean, we publish a monthly economic activity index, which is proprietary. My economist publishes it every month. Yesterday he released it for September. He's saying Q2 GDP looks like 6.5% kind of a print one would see. Obviously some buoyancy coming in from early festive season this time, but be that as it may, you had 5.7% print, you're looking at 6.5%, and hopefully if you go by the commentaries across auto, consumer companies and some of the other consumption pack, you're hearing that rural seems to be coming back into the vogue now. Commentary from Lever, commentary from yesterday from Hero Honda, all of that is pointing towards rural demand buoyancy slowly coming back into the system. So that obviously leaves me a bit optimistic for 3Q and 4Q. And you also have a low base, which is well factored in.
So looking at the earnings and valuations, do you buy more of the same, or you will pick some of the under-owned areas like PSU banks, telecom?
So I am more inclined towards buying stocks where the downside is actually limited and you have a reasonable upside. So, I mean, last 1 week, 2 weeks after the announcement of bank recapitalization, you have seen that some of the sectors which were not in favor, they've come back in vogue, whether it is PSU bank, whether it is telecom, some of the utility companies, some of the pharma companies. You're seeing almost bottoming out of pharma sector as well. While the news flow may not improve anytime soon, but you are seeing that the stocks are not reacting to the incremental bad news. In fact, one of our reports that we published somewhere back in June or July in the contrarian theme, we had mentioned that pharma seems to be a sector where contrarian investing can be done. We like Coal India, we like ONGC. I like Bajaj Auto as well, which has been an ignored stock for the last 2-3 years. That also seems to be recovering as far as the numbers are concerned.
The export number was reasonable today.
Yeah, so export and even domestic seems to be stabilizing. So clearly our preference lies with companies having earnings visibility from a structural point of view. So sectors like private banks, sectors like consumer discretionary, sectors like auto, that remain in favor. But tactically from a near-term point of view, I think even sectors which have been hitherto ignored and where you are seeing some improvement on the underlying fundamentals or at least on the news flow. So there is a room for valuation catch-up. So that's what we have seen after the announcement of bank recapitalization.
You kind of briefly mentioned things that you like. Of late, we've seen a clutch of names which have had a good rally, but the earnings momentum is so strong, really moving well. Rain Industries is a case in point. Your team has come out with a note today. Yeah. The target price substantially higher. After Rain Industries has rallied probably 200% or 300% or maybe more. Now, where are these pockets?
So, it's clearly a bottom-up idea where stock has done well, but it's still trading at a sub-single-digit PE. You still have a decent earnings and EBITDA growth, which is there. Underlying fundamentals seems to be better today, with the demand-supply being in favor. So clearly, there will be pockets of ideas. They're very rare today, given that mid-caps are trading as a pack at 40-45% premium to large cap, and we have not seen this kind of premium for a long time. Even if there was a premium, it used to be very flitting. You didn't see that premium lasting for a long period of time. So clearly, the opportunity to hunt for ideas in mid-cap is limited today, vis-a-vis 12 or 18 months back. But having said that, you still have enough sectors where there is a possibility of earnings pickup and where mid-caps or even large caps for that matter. When I say large caps are trading at a discount, it clearly means that there are pockets of sectors even within Nifty, even within BSE 100, where stocks have not done as well as the rest of the sectors have done. So that is where I think the delta will be earned, or whatever you call it, alpha delta. So point is, one has to be very focused on earnings. One has to be very focused on where the earnings are picking up, because we are coming out of 8-9 years kind of a flattening earnings zone. So earnings CAGR has been 4%. We had a 2003 to 2008 episode where earnings CAGR used to be 25%. Last 8 years has been a 4-5% CAGR, right? And if the market expectations or whatever estimates are there, if 14-15%, even if 10-12% comes through, then there will obviously be reasonable number of stocks where you will still have earnings re-rating, where you will still have decent money to be made. But clearly, the job is not as easier as it was, say, 2 years back.
Well, let's move on to the global markets update, and there are two significant developments that we'll be watching out for, within next 24 hours, or rather 18 hours before we open tomorrow for trades in Indian equities. Let's go across to Craig Erlam, Senior Market Strategist at Onda. Craig, good afternoon from India. Well, first up, the rate decision by British Central Bank. What is really factored into the bond and currency prices as of now?
I think at this moment in time, what's factored in is a rate hike and the potential for one next year. So I think far more important than what the central bank does itself in raising interest rates is going to be the message that accompanies it. And this, of course, is going off the assumption that the market is correct and the Bank of England has been leading us in the right direction, because no interest rate hike could cause quite a shock to the markets and quite deal a blow to its credibility. I think should we get a rate hike and a dovish commentary alongside it, which is what I'm expecting, then this could actually be negative for the pound, because like I say, the interest rate's priced in and the markets are expecting more to follow. So any suggestion that we won't get any more could be quite negative for the pound and therefore weigh on UK yields as well.
What's your call on dollar, because that is what a trader sitting in India would be closely tracking?
I think the dollar is going to have a strong end to the year. I think there's a lot of bullish factors at play that could drive the dollar higher, and it's also coming off quite a weak run since the start of the year and is showing signs of bottoming. I think the fact that we are going to see more rate hikes than the market is pricing in, or at least I believe so, is going to be bullish for the US dollar. I think tax reform is going to be a massive thing for the dollar, and should that pass, and we've seen some good progress in both the House and the Senate, then that's going to be positive for the dollar as well. And finally, Today, I think the announcements for the Fed chair, it looks as though that's going to be Jerome Powell. But what I wouldn't write off is the potential for another announcement either today or in the coming weeks as well, because the vice chair position is also free. So while Powell may have pipped John Taylor to the position of chair, don't be surprised if Taylor takes up the position of vice chair, which means we've got two very hawkish people leading the world's largest central bank.
Do you think Jay Powell is clearly a choice? But if you look at Taylor coming in, you call this pair really hawkish. Do you think market has really discounted the new names coming in at the helm of the US Fed, or do you think market will react to the names as and when they come? And then what kind of reaction do you really anticipate, especially if Taylor really comes in whatever position?
I think the market's factored in Powell. It's factored in continuity. I don't think the market's factored in 3 rate hikes next year. I think the market's probably priced in 1 or 1.5. So I think there's plenty of repricing that could certainly be done here. I think should we see John Taylor get announced as vice chair or someone along the same thinking, then I think this could be a big shock for the markets, and I think this is something that could really spark a rally in the dollar because of the message it sends, because the message it sends from Donald Trump himself about what kind of Federal Reserve he wants working alongside him. And then I think it'll also have a big impact from a regulatory perspective as well, given Taylor's views on deregulation. So I think there's plenty of repricing that could still come in the markets should the appointments be made that I'm anticipating.
Well, thanks a lot, Craig, for taking time out for us.
All right, let's move on. It has been a weak show from music broadcast this time around, with profits declining as much as 11%. To help us decode the earnings in further detail, joining us on the show is Apurva Purohit, Director at Music Broadcast Limited, and Saloni Dhanuka from our research team also joins in the conversation. Saloni, over to you.
So good afternoon, ma'am. Though revenues were up 10%, it has been an overall muted quarter. Can you run us through some of the key financial highlights first?
You're absolutely right that the quarter has been muted for the entire industry, as we can see from the several results that have already come out. However, I'm very happy to tell you that we have grown at double digit, and this is the second quarter this year that we've grown at around 10%. So at an H1 level, our growth has been 11% in our top line. We have also been able to maintain our margins at 32%, which again, as we know, the kind of headwinds that everybody has faced, to maintain a margin of 32% with new stations also rapidly expanding in the same quarter is a credible performance. Our PAT has grown on a quarter-to-quarter basis by 17%. So these are the few highlights of this quarter.
Also, ma'am, how has the quarter been in terms of GST impact? Is it all behind us? Do you think the overall ad spends has come back already?
If you look at quarter 2, which was really the first quarter when the GST impact was felt, July, August were very, very bad months for everybody. September, from middle of September, started doing well, and then of course the festive season started. So obviously there has been an improvement September 15th onwards. Having said that, we think that the impact of GST will be there for some more time till our advertisers get through all the implementation problems that they are currently facing. So we do believe that the headwinds will continue for some time. However, it's only after November will we really know whether the uptake that we've seen in the festive quarter was only because of the festive quarter, or there is a general resurgence. We will only come to know after November.
Can you also discuss growth on new stations and old station, also pricing trends in legacy markets, ma'am?
As I mentioned, we've grown at 10% in quarter 2 and at 11% in H1. I think we'll possibly be amongst the very, very few media organizations that will show double-digit growth in H1. half of this growth has come from our legacy markets and half the growth has come from our new stations. Legacy markets have largely grown on the back of price increases that we started taking in April, May, and the new markets obviously have all grown through the volume expansion route.
Can you also share some details on capacity utilization level and revenue per minute seen in this quarter?
If you look at utilization levels, in our legacy markets, the utilization levels have been between 65 to 75%. With the start of the festive season, obviously, those moved up to around 80-85%. In all the new markets, utilization has been around 25 to 35%.
And my last question to you, ma'am, is Radio City has recently entered into an exclusive collaboration with Apple Music to offer curated playlists to Apple Music users. Any thoughts on that?
We are, of course, very happy to have done this partnership where we are the only radio player who Apple tied up with to provide curated playlists. We obviously hope to take this partnership forward in doing more such innovations with them. I think it's also a sign of the fact that the amount of effort we put in researching our music really is something that Apple thought would add to their own playlists, because we have a huge database of the likes and dislikes of music tastes in the country. And I think that partnership will work very well, because Apple itself will have its own database and analysis of what songs are getting downloaded. And I think both these databases coming together will ultimately end up giving listeners a very, very high quality listening experience.
All right, ma'am. Thank you so much for your time. It was a pleasure speaking to you. So that was the management of Music Broadcast, quite confident about growing in double digits. Back to you guys in the studio.
Thanks a lot for that, Saloni. Well, with that, it's a wrap on this edition of Countdown. Don't go anywhere. Up next is What Did You Miss? Stay tuned to Bloomberg Quint Live.